Is JC breaking your balls like crazy? Is he just having the time of his life and enjoying his win?
We chatted a little bit on Sunday over text message, but nothing much. He doesn't want to hear it, but the Bills beat themselves. Miami had nothing to do with that loss. What's happening, everybody? It's your boy, Chicago Sean McLaughlin, joined as always by my man, Steve Strazza. Hey, today is a very, very special show. Not only are we going to talk about unusual options flow activity, but we're going to talk about ocean flow, wave action, wind action, and this new thing I just learned about spaghetti charts, because Steve Strazza is broadcasting live from the eye of the hurricane down there in Key West. What's up, Strazza? How you hanging in there?
Love a good spaghetti chart. So yes, thanks for shouting those out. And yeah, we got it looked pretty bad this weekend. It looked like the Hurricane Ian was going to hit us pretty much dead on. It shifted a bit west. So it looks like it's heading up towards Central Florida, maybe even the Panhandle. So we're just getting heavy rains for now. Hopefully everything, works out. If I disappear and this thing just cuts like in the middle of the video, then like a palm tree came through my window.
Yeah, I was going to say you'll probably have been impaled by a palm tree. Yeah.
They get really wild. It's fun to watch. But.
Well, I love that if the hurricane wiggles just a little bit, then it's going to head right to our good friend Ian Cully. Hurricane Ian heading right to Ian Cully. It's perfect.
It's funny because he and I were monitoring it and talking this weekend, and I almost felt bad because any good news for me, because where I'm located, was bad news for him. So it was like, if I was happy, he was like, "Oh no!" I was like, "I don't have to evacuate." He's like, "I might."
Is he near Tallahassee?
He's in Pensacola.
Pensacola, right? Okay, all right. Okay, all right. So we'll get into the spaghetti charts in a second, but this is typically the Follow the Flow show. So let's talk about let's get some stock market talk out of the way. I mean, man, what a crazy week basically we've had, essentially since the Fed on Wednesday. The markets have done nothing but go down. We printed I don't know about the NASDAQ, but certainly I watched the SPY a lot more closely, and S&P printed a new bear market low today, intraday. We're off it right now, but things are getting dicey out there, Strazza.
A lot of the stuff that we would expect to lead, right? Whether it's international indexes, the weakest groups and sectors, whether it's communications, Dow Industrials, I think already did it. Semiconductors already did it. Transports already did it. They're making new lows, right? The international index making new lows. S&P, NASDAQ seem to be like just barely holding on. But typically when those dominoes start to fall like that, it's just a matter of time. So
it does seem like the dominoes are starting to fall, and not just in the stock market, right? I mean, we see what's happening with the British pound. We see what's happening with Bitcoin. Oil, even oil is falling off a cliff. Like, it just seems like everything's falling apart.
Energy's done. They've come after the leaders, right? Energy was really the last man standing. There's another one I want to talk about today, though, which is Apple, right? So we talk about how energy was leadership, and in a true bear market, the bears come for everything, right? So energy's had a target on its back because it's been the best performing sector by a long shot all year. So they finally seem to be taking it down. Like you're saying, we're seeing crude oil and the derivatives futures contracts also kind of roll over and print these topping patterns. But Apple's larger than the energy sector, right? So we talk about like sector leaders holding out. Apple's holding out.
Wait, hold on a second. The company Apple itself is larger than the entire energy sector?
I mean, somebody feel free to check my math, but I can't in my head figure out how energy could even be close.
You're talking about representation in the index, not the total market value of Apple versus the energy index.
Oh,
really?
Apple's huge. So what's Apple now? Almost 3 trillion. Exxon and Chevron don't even get you a quarter of a way there.
Seriously? Wow. That's surprising. Wow. I learned about spaghetti charts today, and now you're telling me Apple is worth more than the entire oil services sector.
So from like a fund flow perspective, right? People hang out in the leaders, kind of park their capital there in times like these. Apple is taking on even more funds than the energy sector did to fulfill that leadership role.
Wow. And I'm looking at your screen right now. I see that Apple's on there. So maybe somebody knows something here. Some unusual bullish activity in the calls there.
And Apple almost never makes it on this list because their options chains are so liquid. It's harder to identify a big splash. So this must be large.
So looks like we had 17,000 contracts trade on Apple on September 22nd.
Yes. Near-term options, yeah, they were for this Friday or for last Friday, I guess.
Okay.
Going on there. I like it a little bit when they go out a little bit further. Feel more like they're actually making like a bullish bet on the stock rising. Let's hit the charts. This is Apple on a relative basis. Not many things look like this right now. So we're making new all-time highs. You know, the tech sector has gone sideways on a relative basis for the better part of 2 years now. And it looks a lot like this space in Apple versus the S&P. Difference is tech sector is rolling over right now on a relative basis. Apple's breaking out.
Right. Let's be clear. This is not Apple making all-time highs. This is Apple making relative all-time highs versus the S&P 500.
If we look at the absolute chart that's here, there's not a really great place to define risk for a trade in Apple right now. So I don't love it. I'd rather be buying, breakout to new highs here. But when you zoom out, that's why I wanted to bring this along. This is a weekly chart. Any weakness in Apple over the past decade has been, an incredible buying opportunity. Do we want to make the bet that this time is going to be different while it's showing, the most impressive relative strength of anything in the market right now? Probably not. So I think there will be a very good time to be adding to Apple in the coming months or quarters.
Of course, we also know that if Apple does get killed, well, then that's it for the market.
You would almost expect it to. Like, I would expect a deeper drawdown for Apple once this thing is all said and done. And that's kind of part of the reason why I think it's worth highlighting today, because there's no bigger leader. But at the same time, because we're in this environment where the leaders have targets on their backs and are folding one after the other, I don't want to jump into Apple right here either.
Let me ask you this. Is Apple in the consumer discretionary ETF? Is that represented there?
Tech.
It's in tech. Because, I don't know. I get it. Apple's a tech company. I totally get that. But you could also make the argument that people with discretionary income, money to spend, they will, go up the premium scale and buy the Apple products that are more expensive. So I feel like they're one of those luxury items almost.
I couldn't agree more. It's consumer electronics company, right?
Okay. The reason I was asking that is because I just put on a bearish trade in the XLY ETF on Friday. Hoping a soft Apple would help that out.
No, it's Amazon and Netflix and Tesla. And here's the thing with tech and classifications. You can say that about any company that's in tech, pretty much, that they could go somewhere else. And that's because technology is so pervasive. If we continue to chip away at the tech sector and move things into things like communications and put Amazon and stuff into discretionary, there'll be nothing left in tech eventually. So for now, it's Apple and Microsoft really driving the weightings in XLK.
Okay.
So the list was busy this week. I brought along a bunch of charts. I know that we often joke that we're not going to look at the list beforehand. I cheated this week. I totally looked. I looked a lot. So I brought a bunch of charts. Do you want to go through them? You can stop me if you want to talk strategy about any of these names.
Strazza, look, I want to give the audience, all the Steve Strazza fans out there, I want for them to get a good run of charts out of you, because we might not hear from you for 4 or 5 days if this hurricane makes a right turn.
I'll be kayaking down the post road. Yeah, let's do this while we can. All right, this one. Started out with some uranium. Cameco keeps showing up on our list. We've tried to get long this name. We've tried to get long the common. I know we put on options strategies. You can talk more to that. It's been a really, really frustrating go at it. When we zoom in, this is what the chart looks like. It's a total mess. And that's really what we've come to expect in this market, and what we should expect whenever we see this. This sideways gray line is telling you mess, slop fest. This is a sideways 200-day moving average. What that means is expect false starts, expect whipsaws and shakeouts. You see them in both directions here. We're getting shook around.
On that chart, can you spot the exact 2 spots where I put on bullish trades? Yep, exactly.
And listen, we're in the type of environment where the strongest stocks are failing to break out, and it's very frustrating. This is definitely one of them.
Yeah, we were in that and we just got stopped out of it recently, earlier this week.
This name I brought along because you and I last week got some awesome conference gear.
Oh yeah.
I've been drinking out of mine. It's
Dude,
down.
yeah, we got an awesome shout out to Morningstar. We got these awesome Yeti mugs at the conference. I mean, seriously, awesome. Great stuff.
And guess what? I have a meeting with Morningstar on Friday, which maybe I wouldn't have had if it wasn't for those Yeti mugs. So conference goers give great gear. It gets you meetings. It's important stuff. It's great.
There you go. There you go.
Morningstar, no, they do have excellent fundamental data. Maybe we'll use them for earning stuff. But Yeti, the mugs that they were giving out, Yeti manufactures all sorts of cool stuff like that. Actually, they're huge down here in the Keys. It's kind of like a status flex having Yeti gear among the fishermen. Love that. But listen, it's not working, whatever they're doing. So this is one of those examples of a total COVID round trip. This was a, darling just a year or two ago, ripping off of its 2020 lows. Now we're back below those pre-COVID highs. And you know what we're going to start to hear a lot of, Sean? COVID lows as targets. Haven't heard too much of that yet, but when you look at a lot of these growth stocks, the weakest stocks, that's just the next logical level for a lot of these things now.
Well, I hate to get macro on you because we're not macro people, and I'm certainly no macro expert, but if we take a step back and just think about the COVID lows and think about what has the economy accomplished in the time since the beginning of COVID to now? I mean, have we really made super advances in everything in the economy? I don't think so.
We pumped a ton of money into it with disaster relief bills.
I mean, I feel like those COVID lows are inevitable at this point. I mean, I'm not going to sit here and say I'm a perma bear by any means, but I mean, those COVID lows, I feel like they have to get tested at some point in the near future.
You're seeing certain things that are really cracking. I don't want to say breaking, but international real estate already there. Global real estate, something's not right over there.
Something's not right.
Right. Well, we could talk about that real quick. With the dollar doing what it's doing, we have the pound hitting all-time lows versus the dollar. Things like the yen, the euro, decade-long or multi-decade highs and lows. The dollar is literally destroying everything in its path. That's only so sustainable. So while you're starting to get like a parabolic vertical move in the dollar, which in my opinion, you don't want to get in front of this, but this is fourth quarter stuff, right? We're near the end. Whether this is the beginning of the end or the end of the end is hard to say, but it's getting really exhaustive, what we're seeing. What really is going to come in and be the big question is what breaks? Does something break in this process? Right?
Something has to break. This is crazy stuff going on everywhere.
And you would think that should be coming, right? We should be hearing about it soon. This price action should drive something to break if it continues. And then maybe we enter an environment where dollar finally cools off, peaks. Maybe it's sideways, maybe it's lower. Typically, when you get that strong of a blow-off type move, you will get a sharp correction. And that could be what risk assets were really waiting for.
That kind of dovetails to what I was, I didn't tweet this out, but I almost tweeted it out earlier. And my timing would have been perfect. But I was like, man, I don't know, but it's starting to feel like the mother of all bear market bounces is just around the corner.
We got to be close.
I'm not saying a bottom. I'm just saying a crazy bear market bounce that, of course, we could retrace and go lower again eventually. But I feel like any day now we're gonna like finish off a day where the S&P's up like 3%, Nasdaq's up 4%. We're gonna have one of those days pretty soon. I just feel it. I feel it in the tea leaves.
I couldn't agree more. Yeah, things are getting absolutely washed out here. We need price to finally start to confirm some of the stuff that we're seeing. Even today, I mean, Sean, you pointed out just how bad the tape's been, I think, last week.
Mm-hmm.
You can't even hold an intraday rally.
I think it was on the intra-company Slack on Thursday. I said to you, market feels sick.
It looks sick, too. Sharp. Casinos. Really strong bid yesterday. There was some sort of news. I didn't pay attention to it. I saw stuff coming across on the headlines. Melco Resorts and Entertainment, MLCO, big Chinese exposure here in this one. This is what some of the worst stocks look like. Yeah, I was hoping that you would pull up a chart with today's data, right? Because we have this little bearish continuation pattern that looks like it's resolving to the upside, but just like we're not seeing breakout stick, example, Cameco, we're not seeing these short-term reversal patterns resolve higher in a valid way either. They're all failing. So you're already seeing it today. It's peeling back a little bit. Yesterday it got a nice little breakout, solid volume on the breakout too. Does it hold? I don't know. I would look at this, again, the gray line, downward sloping 200-day moving average, tend to not see breakouts stick in that environment either, just like the sideways 200-day.
Right. Yesterday's volume was the highest volume all year.
So we'll see.
If I do a weekly candle, I'll bet you it's even further out. Let's see here real quick.
These short-term bases need to start holding and resolving higher.
There's only 1 week in the last 3 years that had a higher volume, and that was during a big sell-off week in September.
Look at the implied volatility.
Yeah, steadily rising. I mean, I don't know. You know how I feel about trading options in these cheap stocks. I'd rather just buy the common.
Yeah, this one's, wow, $6.
In a strange way, buying common in a cheap stock actually feels less risky to me. Maybe I'm crazy. I am crazy. That's a crazy statement to make.
So I got an email a few weeks ago. Sean, you probably know about this. Client said, Steve, why do you pick on Verizon and AT&T so much? And he's not wrong. I do. And I hate those stocks, but it's not them. It's not about them. It's about telecom services in general. Why do I really despise these stocks? It's simple, because they teach investors the worst lesson about dividend stocks. I mean, these guys are so guilty of baiting people in with a big dividend and then just burning them with capital depreciation.
Guilty. My son is invested in Verizon stock.
It's a staple for investment advisors. We think it's such a safe name. Think these are such quality stocks. They're not. They don't even raise their dividends. They can barely even maintain them. And all they do is go down. So it's not Verizon. It's not AT&T. Here's Vodafone, which is, think of like the UK's equivalent to those companies. Lowest level since 1997, 25-year lows. You can't buy these stocks. All the big telcos, I don't care if it's BCE, which is Canada's, Verizon, AT&T, Vodafone in that group too. T-Mobile looks okay. Actually, it looks a lot better. Very different. I wouldn't even put them in this group of stocks. So I just wanted to talk about that one. I don't think there's any strategies. Yeah, I
mean, it's surprising, man. I mean, in a world where everyone has a mobile phone, yeah, and everyone's paying a monthly service fee, you would think that these companies, I mean, at the very least, would just be boring, like utility dividend payers.
Great point. They couldn't be in a better position. We literally pay AT&T and Verizon every month. So I don't know what these stocks need to make money or for their share prices to go up. If they can't figure it out now, I wouldn't really count on it. I've been waiting my whole career, personally. Next chart, Cano Health. This one really stood out. We talk about how these short-term bases really need to stick. Biotech is an area where there are some of the longest bottoming formations, right? A lot of stocks in the biotech space have been carving out bottoms all year. This is a great example of it. So you really have a nice base built out there, a nice little launching pad. I would say this is a pretty decisive upside resolution for sure. Running right into the 38% retracement here. I think you could buy strength above it. I do like this one really coming out of the space. See this 200-day? We need this to curl around and start curling higher. So this will probably continue to be messy, but it looks better than 99% of things out there right now.
Well, I'm looking at the options chains for Cano, and it's actually got more liquidity than I expected. I'm looking at December and January options right now. There is meaningful open interest here, and the bid-ask spreads, all things considered, aren't terrible. I wish this at the money January strike was a little tighter on this bid-ask spread. We got a bid by 125, offered 155. I wish it was a little tighter than that, but I mean, the implied volatility is currently pretty low for Cano. If you look on this chart here, it's been trending lower since the early summer. Not at the lowest levels, but not terrible. If this was something that we wanted to bet on a continuation, maybe after it kind of, maybe if we wait for that 200-day to flatten out at least. Going out in January, looking at 12 and a half calls, I think. Paying 50 cents for them. I don't feel like that's a terrible idea. I mean, in percentage terms, that's a big move, right? I mean, that's a 50% move in the stock, actually, now that I think about it. But I mean, we look at where it came from. I mean, it was north of $14 a year ago.
Will you ever, Sean, leave out orders to get into something like that? Like you're saying, there's bid ask 40 and 60. Say you only want to pay 40, you're not going to get filled. Will you leave it as like good till cancel? Or no, you don't really want to do that with options, do you?
That's not something I typically do unless it's something I know that I want and I don't want to micromanage it. Then I'll put a limit order out, good till cancel, and just wait for it to get filled. But it's not something I do very often. In fact, I probably do it less than 1% of the time on any trade that I put on. It's usually if I want to get into a trade, I want to get into it today, and I'll work my order throughout the day until I get filled. And if it doesn't get filled, then start fresh tomorrow, that kind of thing.
How about the volume on this breakout here?
On the Cano? Well, I mean, wow. Friday and Monday, no, it's that Thursday, Friday, tremendous volume. And it's just flagging here on relatively lower volume. I mean, what's not to like about that if you're bullish?
So running through all the names, I mean, this is what we're up against. This is the plight of the, long only or breakout trader, is you're looking at most of the charts like the ones that we just looked at. And then every now and then you get a Cano come around. And a lot of times these aren't perfect. We're still facing a downward sloping or sideways 200-day moving average, just now kind of getting out of a base, in an environment where new highs are not sticking. So low probability setups, right? Pretty much anything on the long side these days.
I would agree with that 100%. I mean, this is not the time to be aggressively bullish. I mean, there's nothing wrong with making some bullish bets, but being aggressive, risking more than you normally would risk. This is not the environment to do that for sure.
You don't plan fishing trips during hurricane season.
So you're not fishing this week? Is that right?
No, I haven't fished in a while actually.
All right. Well, apologies to Brandon, our tech guy behind the scenes, who's running the show here. Sorry we're going so long, buddy. Just we got to give. This might be the last time we ever see Strazza, so let's give him some time.
My last live video ever.
All right. Well, look, let's sum it up here, Strazza. There's nothing on the board that we want to get aggressive with. Maybe this Cano, if this flag builds a little bit here. But there's nothing, it's just not the right environment for us to be getting insanely bullish. And so we see a lot of green, unusual options activity on the call side on the board this week. But I mean, do we want to follow that stuff in this tape right now? I mean, maybe we'll be kicking ourselves 2 weeks from now, Strazza, but right now it doesn't feel like their time. So I think there's no trade right now, bud.
It'll happen eventually, right? That'll happen eventually when we do get that fierce bear market rally that ends up not being a bear market rally.
Yep. The one that everyone thinks is a bear market rally, but just keeps going and going and going and grinding higher.
Yeah, that's when it will happen too, right? Whenever there's no way is a new bull market. But we'll see. But typically, if you miss that, right, you miss the bottom. You don't have to pick the bottom, but at least you weren't involved in all these false starts, over the past 6 months.
All right. Well, we better end this now so Strazza could go hang the hurricane shutters on the windows because it's starting to get dicey out there, right? The wind is picking up?
Yeah, it is.
All right, buddy. Well, hopefully we'll be live with Strazza again this time next week. We're all wishing you good luck down there. At least if nothing else, just stay dry. All right, buddy?
You else too. Stay safe out there.